Today, we're going to dive into a pretty wild case study about how 4 accountants from a single Austin tax firm cooked up a multi-million-dollar fraud scheme. We're going to break down exactly how they did it and what this whole story tells us about that very fine line between accounting and a federal crime.
So get this. It all starts with one tax firm in Austin, Texas. You've got 4 accountants and a single conspiracy that ended up costing the U.S. government nearly $10 million. I mean, those are the big headlines. But the real story here is how a scheme like this can go on for years, right under everyone's noses.
So how did this all finally come crashing down? Well, it all ended with a guilty plea. Every single one of the 4 tax preparers admitted to conspiring to defraud the United States. And look, this wasn't just some bad math or a simple mistake on a form. This was a deliberate, coordinated plan to steal.
And this wasn't some quick smash and grab job either. This scheme was running for 3.5 years. It started back in early 2019 and went all the way to the end of 2022. I mean, that is a long time to keep a criminal operation like this going, filing one fake tax return after another.
All right, so who are the people actually running this whole thing? Let's meet the 4 individuals at the very heart of this conspiracy. According to court documents, at the top of the pyramid, you've got Matthew Chaco. He was the ringleader. And working with him were Anish Pillai, Mukundu Mundath, and Subala Suresh. But here's the key thing. While they were all in on it, their level of involvement and, frankly, the amount of damage they each caused was hugely different.
You're probably wondering, how did they actually pull this off? Well, the crazy part is, their method was actually pretty simple. They just lied. They inflated their clients' tax refunds by basically inventing deductions and expenses out of thin air.
They had this two-pronged attack, right? On one hand, you had clients come in who wanted a lower tax bill, and these accountants would just make up expenses to get the number down. But then, and this is the wild part, other times they'd fake the deductions without the client even knowing about it, all to juice up that refund. Either way, the result was the same, a bogus tax return filed with the IRS.
This quote just nails it, doesn't it? This wasn't about finding some clever loophole or using a fancy tax strategy. By creating fake expenses, they were just making up numbers. That extra money coming back in the refund didn't belong to the client, it belonged to the public. Plain and simple, it was theft.
Okay, now for the part you've been waiting for. Let's follow the money. Just how much damage did the scheme actually cause? And trust me, the numbers here are absolutely staggering, and they tell you a lot about who was most involved.
Let's start with Mukundu. According to the plea deal, his role in the scheme led to a loss of up to $550,000. Now that's already a huge amount of money, right? But believe it or not, we're just getting warmed up.
From there, the numbers just explode. Next up is Anish Pillai. His actions led to a loss of $3.5 million. So now you can really start to see the scale of this operation just jumping off the charts. And that brings us to the ringleader, Matthew Chaco. He was on the hook for the biggest piece of the fraud, causing a total loss of up to $9.5 million. I mean, that is just an unbelievable amount of money to steal in just a few years. When you see it laid out like this on a chart, it's just wow. Chaco's involvement completely dwarfs what the others did, and that, right there, is a huge reason why he's facing the most serious potential punishment.
All right, so they got caught, they pleaded guilty. What happens now? What's the real price you pay for a multi-million-dollar crime spree like this? Let's take a look.
Because of that staggering $9.5 million loss, Matthew Chaco is facing up to 5 years in federal prison. The other 3 co-conspirators, they're each looking at up to 3 years behind bars. Now, a federal judge will get the final say on their actual sentences. But you know, this whole thing is about more than just one case in Austin. There's a much bigger lesson here about why the government takes tax crimes so incredibly seriously.
At its core, tax fraud is theft. Some people might think of it as a victimless crime, but it's really not. When people steal from the U.S. Treasury, they're stealing public funds. Money that's supposed to pay for roads, for schools, for national defense, everything that society relies on.
And that is exactly why the government prosecutes these cases so aggressively. This whole case is just a powerful cautionary tale. The system is designed to catch this kind of fraud, and when it does, the consequences are severe and ultimately pretty much unavoidable.
Which kind of brings us all back home, doesn't it? It leaves us with this one big question to think about. In this case, the fraud was so clear-cut. They were just making things up. But for all of us in our own financial lives, when does aggressive tax planning cross over into illegal tax evasion? It's a critical distinction, And as this case shows, getting it wrong can cost you millions and your freedom.